Amidst the storming,
violently storming the country's presidential offices,
the surveilling,
the U.S. shot down the suspected Chinese surveillance balloon,
and the soul-searching.
I don't think that we can ever have peace.
What were the biggest stock market winners and losers of the first half of 2023? We found the stocks that grew the most and fell the most. Remember, everything in our film is based on past performance and market data. So here's your halftime review show of the stock market in 2023. Back in the beginning of 2023, the world was braced for bad news.
Economists are expecting inflation to rise 0.5% for the month.
The Federal Reserve is eyeing yet another interest rate hike.
But perhaps things weren't as bad as they could have been.
The start of 2023 was a very dire outlook for the stock market. We've seen bank failures, we've seen recession fears evolving, we've seen borrowing costs hitting the highest level since 2007. But even so, investors have been very resilient and they've been putting a lot of their trust in the stock market, and we've seen that pay off.
But there were still companies that lost big. So who lost the most? The index we're using is the S&P 500, which tracks the 500 biggest stocks in America. And we're only looking at the companies with a market cap of over $100 billion. 2 of the top 10 losers were energy companies. The world has been adapting to the energy shock caused by Russia's invasion of Ukraine. As the scramble for new energy supplies eased a little, Nextra Energy dropped 11% and Chevron's shares by 12%. One sector appears 5 times on our losers list, and that's the science healthcare sector. Danaher Corporation, Elevance Health, Amgen, AbbVie and Pfizer all had a poor start to 2023. With Pfizer topping the list with losses of 28%.
If you look at the worst performing sectors in general of the first 6 months of this year, are those that actually had a good performance in 2022, which are energy, healthcare and utilities. In general, healthcare is just riding kind of that latter part of the COVID wave, and we're seeing a lot of that valuation that was brought in and induced from the pandemic being wiped out of the market this year.
But the biggest loser came from financial services. While Bank of America came in 8th, the Charles Schwab Corporation made losses of over 30% since the start of the year.
I think what has been the worst part for the banking sector so far this year has, of course, been the collapse of several US banks. Even the big banks, which are deemed too big to fail, they were also scrutinized to some extent. And I think especially those banks that have invested a lot of their excess liquidity into bonds. Charles Schwab and other banks have a business model where they've always focused a lot of their excess liquidity into loans, especially into government-backed loans. And I think this is where we're seeing a lot of that value being wiped out of the market, is because the banks have come under deposit pressure and under pressure from rising yields in some of these bonds they have invested in.
Now, before we continue, a reminder that here at Capital.com, we make explainer videos about trading and economics, giving you insights on the markets so you can make informed trading decisions. We're also a trading platform, so you can make your trades right on our website or using our app. After this, check out our recent explainer on defense stocks. Our winners enclosure is dominated by one sector that came roaring back after a rough 2022. A sector that took 7 of our top spots. But first, let's take a look at the outliers. Applied Materials and Broadcom both make semiconductors. As semiconductors are in short supply, their prices rose 49% and 56%, while General Electric, which makes electronic equipment and aircraft engines, rose 65%.
Semiconductors have been performing outstandingly well because they're expected to have increased demand in the next couple of years, and I think they have been the clear winners of this revolutionary AI phase that we're going through.
But the big winners in 2023 were, of course, big tech. Netflix came back from its reported deathbed to make gains of 49%. With Elon Musk free from Twitter and able to focus on Tesla, the electric car company rose 127%, while Mark Zuckerberg, who probably won't fight anyone in a cage anytime soon, saw his company rise by almost 138%. But the big winner was Nvidia, whose share price rose over 190%.
We saw a lot of cost cutting at the end of 2022. We saw a lot of restructuring. We saw layoffs in the tech sector. And that was giving a very negative picture at the end of last year because essentially so many layoffs and restructuring was giving the impression that they were preparing for the worst to come. But effectively, these cost-cutting efforts have actually paid off. Big tech companies have managed to ride out the wave of the worst part of 2022 and come out the other side fighting.
Right, that was the last half year. Our next film is going to take a look at the big stocks that could be overvalued or undervalued right now. Thanks for watching. Remember that the price of stocks and shares may vary depending on changing market conditions. You can read more of our analysis by clicking on the links in the description below. And don't forget to subscribe to stay alerted to our regular chart analysis videos each week and other explainers on big financial topics of the day.